Do you think these bank failures mean that home values are going to drop? It's not surprising if you do. When most people hear about a crisis in the banking industry, their minds go right back to the last financial crisis in 2008 that was caused by the mortgage market meltdown. But really, what we're seeing today is something very different, and it's actually a lot more similar to what we call the savings and loan crisis that happened in the late 80s through the early 90s. Back then, just like today, the Federal Reserve rapidly hiked interest rates to fight high inflation, which devalued long-term assets held by small banks and causing a lot of them to fail. But even though rates were high and the banks were failing, home prices kept going up. Before the crisis, U.S. home values skyrocketed 112% from 1976 to 1985. Sounds kind of like what happened in 2020 and 2021, right? And in the 10 years during the crisis, appreciation slowed, but values still went up 40% during that period. And after the crisis was over, prices rebounded and appreciated 124%. From 1996 to 2005. Now, as we watch this current banking crisis unfold, nobody knows for sure how contagious it will be. But I just think about the saying, history doesn't repeat, but it often rhymes. With a significant housing shortage, lower inflation, and mortgage rates moving down, we expect that home prices will continue to appreciate as we work our way through this crisis.